everyone, welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Kavita, and over the course of next 1 hour, we're going to be taking all your stock-related queries. In a short while from now, we will connect with our experts and take as many queries as possible. But before that, let's have a quick look what the markets are up to. So it's turning out to be a good Tuesday rather for the markets, because markets are witnessing a decent recovery from the day's lowest point. Take a look at Nifty 50, which is back above that 25,800 mark, while for Nifty Bank as well, at one point in time it was down over 300 points, but a decent recovery over there as well, which is now just almost 49 points of decline is what we are witnessing. In any time from now, it can get into that green territory. So a good recovery from the benchmark indices, but so is the recovery in the broader markets, because at the start, the breadth of the market was quite worrisome. On NSE, there were almost 2,200 stocks that were seen to be declining. Almost 500 stocks have recovered from that point, and even some of these large cap counters are supporting very well. Case in point being Titan, Eternal, Shriram Finance, and even SBI, and surprisingly, Interglobe Aviation are some of the counters that are seeing good moves and are trading in the green right now. But on the flip side, another surprising factor is the 4% cut in Asian Paints. No such reports, no such news flow, but the stock is down almost 4% as we speak right now. But Kavita, what we can say is definitely a good day for the markets after that fall that we have seen yesterday.
Absolutely, absolutely. And yes, we still have few more trading hours left, but then let's switch to our viewer queries now, and we are joined by Kunal Botra in the studio. Kunal, hi, and welcome to the show. Before I pick up a SMS query from our viewers, how is this recovery looking like to you?
Any color of green is good in the market. Lightest green, light green, neon green, any green is good for the markets.
True.
So I think it's good to see the recovery back again for the indices. I think on the intraday parameters, when the Nifty had hit 25,750 odd mark, or on the spot levels, the put call ratio for the index, the PCR ratio, had hit almost 0.4748 the last I had seen, and these are very, very oversold numbers for the sentiment indicator. So I think in that perspective, we're seeing a bounce back, or more like a relief rally for the index. I think now for a meaningful trend to begin, the markets would want to have the cues which could come out from the monetary policy or from the Fed policy tomorrow. If that also, I think, comes out to be on the positive side, then I believe that a more stable recovery as well as a trend could probably shape into the markets going forward.
Right, so that's a checkup on the market. We're also joined by other expert, Avinash Korakshkar. Avinash, hi, welcome to the show. And for our viewers, this is the show where we're answering your stock-specific queries. Just in case you want to send across any question, the number is flashing on the top of your screen. And also, we are conducting a South Tour special where our focus is on Bengaluru. Just in case you are a viewer from Bangalore and want to ask any stock-specific question, please do that. Send the number on our WhatsApp number and the name of the stock, the price at which you've bought it, and for the time horizon you want to hold that particular counter, and we will get you a technical and a fundamental view depending on your time duration. So let's begin our viewer queries, and first question is a WhatsApp query from Vinod, and Avinash, I'll come to you. His query is on Bajaj Housing Finance. He's bought 800 quantity at 114. He's not given us a time horizon, but what would be the targets that you want him to hold this particular counter till?
Yeah, I think, good morning, Kavita. I think clearly, Bajaj Housing is a stock where I think you need to take a little slightly medium to long-term view. It's part of the Bajaj Finance group. And ever since it went public, it has been in the limelight, but then successive quarters have not been very encouraging. But if you look at the overall macro situation, interest rates have come down, GST cuts have happened. There's a good kind of growth from the rural market. So I think, housing as a opportunity is going to be very big. If the investor can hold on for the next 12 to 18 months, he could at least look at levels of 140, 150 initially. And this is a compounder stock, so I think he needs to stay invested for the longer term.
All right, that's the take coming in on Bajaj Housing Finance. Let's watch out for that. But the next question that we have is coming in on DLF. Kunal, let me take it from you, because Sharmishta from Kolkata has already bought 100 shares of DLF at a price of 710 rupees. What's the outlook for the next 3 months, if you can guide her?
See, short-term wise, it may look a little bit more tricky, because most of the realty stocks are going through a very sharp selling. But then, there would probably come a point where the realty names will start to look very attractive. I sense that DLF has hit back that first major support point on the medium-term charts at levels of 675, 680 on the spot basis. I believe it's a good territory where you may look to start initiating a buy. In case if the stock drops a little bit more further, say back towards the 650 levels, that's where I would suggest to add further.
All right, so that's the recommendation to Sharmishta Malik. But then let's move on. And the next question, Avinash, is from Ignatius, our regular viewer, and he's writing from Kolkata again. And Sula Vineyards, he's bought 20 shares at 563. A near-term outlook on this particular counter for him?
Yeah, I think clearly, I think if you look at the business model, I would say that Sula is definitely a promising bet. But in the last few quarters, numbers have not been very encouraging. The Indian wine market is a very big opportunity, and I think if the investor can hold on for the next, say, 12 to 15 months, it's a decent, kind of investment bet. But provided the investor gives in some time, we are pretty hopeful that next year should be a good year. And considering the kind of brand Sula enjoys, I would not be surprised that one could get a good risk reward only over the next, say, 12 to 15 months. So stay invested, but you'll have to give some time here.
All right, so Sula Vineyards, you have to give some time. That's the call coming in from Avinash. But the next query is from Shashidhar Reddy, writing to us from Hyderabad. Need a view on Birlasoft or Infosys with an entry price for 1 year. Kunal, if we can guide him on the IT majors, Birlasoft, Infosys, anything that looks good, or would you recommend any entry price for both any of these counters? And along with that, the second query is on Ashok Leyland, holding 900 shares, buy price is 117 rupees. What to do with this one?
See, I think for Ashok Leyland, I'll suggest to continue to hold on, and I think that the stock has done reasonably well for itself on the medium-term charts. Recently also, I think the stock managed to make a new high, crossing 160-65 kind of a zone. So, looks to be a strong stock. I would suggest a hold on Ashok Leyland. But for Birlasoft as well as Infosys, I think for both of these names, I think current levels is where you can look to start investing or nibbling into the stock prices. What these stocks have shown is that there has been a breakout of the 200-day moving average for these stocks after a gap of almost 10 months to 12 months for these names, and that tells you that the price perspective in terms of trend will probably be on the recovery path. But we've seen historically that when stocks go into such kind of a recovery, there comes a phase where, say, potentially over the next 1 or 2 months, there could be maybe one more selling which could happen into the stock prices before you see a resumption of a major uptrend. So you can start looking at maybe 50% of your investment quantity at current levels, and the balance 50% you can look to buy in case over the next 1 or 2 months these stocks go into, say, a broad 10% to 15% correction.
All right, so that's a take on Ashok Leyland and Birlasoft and Infosys. It's a hold as far as Ashok Leyland is concerned. But the next question, Avinash, is from our viewer Satya, and he's asking, is it time to average or switch to Tech Wabag for the next 12 to 15 months? And that's a time frame, and he wants to know the buying price. If at all, it's a recommendation. If not, then what would be your recommendation for him?
No, I think Vatek definitely presents a very strong opportunity in the water, resources space. They have a large order book of almost 12,000 crores, and I think the visibility for the business is good. Most importantly, most of these projects are very critical projects. So obviously, in the next 12 to 18 months, we expect that these projects will get executed. So around 1250 to 1300, I think he could definitely do an SIP here. Our sense is that this stock has been beaten down because of some expectation that government orders have come slow and cash flows are getting under pressure. But I think obviously once you see the December quarter and the March quarter, which is supposed to be the peak period for the company, I think the stock should get re-rated. So around 1450, 1500 is a good level where I think you could get a decent risk reward. So I think at these levels also one can invest, but try an SIP method which will average your cost.
All right, so try an SIP method when it comes to Tech Wabag. But moving on to the next query, we have Narayanan from Chennai writing to us, where he's holding 5,500 shares of Ola Electric. Avinash, let me come to you for this one, because yes, of course, there's been a lot of excitement for this particular counter, and I remember all the way from close to 30 rupees, the stock went close to 55 rupees on the hopes that the new products can do well for Ola Electric, the newer battery can do well for the financials as well. But the momentum is seen to be losing, and so is the feedback. But what's your view on Ola Electric? Because Narayanan is already holding quite a quantity at a price of 51 rupees. What's expected?
No, I think Shrishti, in the electric space, I think Ola has disappointed a lot of investors, and I think ever since it went public, I think the biggest problem for Ola is the narrative is very strong, but the numbers have not come in that convincingly. Since he has a very large quantity, I would tell him that I think rather than adding more, I think wait for at least another 3 to 6 months, because hopefully the company's product strategies, the marketing plans should take off, but I think you're going to see a lot of pain in the near term. So I think only beyond March 26, I think you could see some recovery happen. So till that time, I think it's better to hold. Q3 will be a critical quarter. We'll like to wait for the management commentary and the guidance. And only after that, I think one can take a fresh look.
All right, so stay put right now. Q3 important quarter as far as management commentary and trajectory is concerned. But then time for a short break. But in case you haven't sent across your questions yet, do that on our WhatsApp number that's flashing on the screen. Welcome back. You're watching Buy Now, Sell Now from ET Now SBI Live Studio, and we are answering your stock-specific queries live. We are joined by Kunal Kochhar and Avinash Korashkar as our experts for the day. And let's move on. Our next question is from WhatsApp. Kunal, I'll come to you. This is Dimple from Mumbai, and she wants to know if this is the right time to buy Sanofi for long term. So let's take this question from both of you, you and Avinash both. So first, your take, a short term and a buy price, if you could recommend, Kunal.
See, I would not recommend a buy on the stock price at current levels, irrespective that the stock has gone towards and now trading, I think, at multi-year lows. I think if I'm not wrong, it's almost at 2023, comparatively 2023 lows for itself, and the correction has been quite steep for Sanofi from 7,500 to now 4,200 to 50 mark, where it's trading right now. The pure reason for that is the stock has been a complete underperformer even in the last 2-3 months. On the short-term charts, the management with the stock had managed to break below its 200 DMA, a bearish crossover where the 50 DMA has crossed below the 200-day moving average for the stock price. All of that is auguring into a negative trend for the stock in the near to medium term. I would suggest an avoid.
All right, so it's an avoid from Kunal. But then Avinash, what's going to be your take?
As Kunal was saying, fresh buying is not advisable. I think quarterly numbers have not been great. And secondly, the margins picture has been really distorted. So I would say that those who are holding on can definitely hold it as a good long-term kind of bet, considering that it's an MNC and, the company benefits via R&D by the parent. But I think if one were to look at growth, then I think there are many other pharma stocks, Kavita, which are available. I think largely we have been positive on, as well as Vocart. So I think these companies I believe have got a better risk reward considering Sanofi at the current odd levels.
All right, so that's the take coming in on pharma counters. But moving on to the next query then, and Avinash, this query is coming in from Kaynes Swami. Have two queries rather. One of this is on LG Electronics, where he's holding 100 shares. Buy price is 1680 rupees. What's your view and advice here? And the other one is Tata Capital. Bought 200 shares at a price of 340 odd rupees. What's your view on both of these recently listed counters? For LG, of course, he's having a loss, and so is the case for Tata Capitals.
Senses in both these companies, companies are very well managed and are very, run by very prominent kind of business groups. I think the investors should take at least 12 to 18-month call here. I think post the listing, we have seen this happening with many companies. LG is running a very strong business model. It's a debt-free business. And it's got a very marquee kind of product range. Hopefully the second half, October to March, is a very strong season for LG. You could see very strong numbers. So I think keep the faith alive. At least for the next 12 to 18 months, you need to stay invested. As far as Tata Capital is also concerned, they've got a very strong brand franchise, a very strong marketing network. It's available at 3 times price to book. My sense is that, numbers will definitely be better in the second half. Hopefully, it is an NBFC which will benefit by the rate cuts announced already. And I think demand in the second half is going to be much better. So here also, I think the same view remains. The group is very prominent. They have always rewarded investors, but I think you need to stay invested over the next, say, 12, 18 months. Both these stocks should be held on. I think don't sell in panic.
So it's a hold on both the counters. Let's move on. The next question is from Mr. Varghese, and he's from Kochi. And Kunal, he's holding Reliance Industries with the average price of 1550 since last 1 year. And Ola Electric comes in the conversation at 50. So what's going to be your take on both of these counters?
See, Reliance, of course, you have to hold on to. Yes, the stock has been more sideways when you look at this over the last 1 or 2 years, but then that's how the large cap arena has been as compared to mid caps and small caps, which have been down 20-30% broadly. So I think in that context, Reliance has managed to outperform, of course, from that kind of a perspective or lens. I would believe that the stock can have a good upside over the next 1 to 2 years with that kind of a time frame. I would suggest a hold on Reliance. Ola Electric, on the other hand, I understand that the stock has gone through a very sharp correction from the recent highs of 70, 71, which the stock had made, I think, in the month of August or somewhere. I think from there on, the stock has fallen very sharply. It looks like that the indicators are getting into a bit of an oversold territory for Ola Electric over the near term. So I'll suggest a wait as of now over the near term. In case if there is a bounce back, the stock comes say closer to your cost price around the 40-45 kind of a mark, that could be a good zone where you may look to exit the stock.
All right, so that's the take coming in on both of these counters. But Kunal, I'll come back to you for the next query because this one is coming in from Nishan from Bangalore. He has a query on KEC International. He bought the shares at a price of 910 rupees, now having a 24% loss in this particular counter. What will you advise? Hold or book loss? Because I can see that the stock has bounced back from these levels of 680 quite many times. What's your view here?
Yeah, it's a good support, and I think frankly stocks like KEC International, which has done exceptionally well over the last 8 to 10 year period. I remember I think tracking the stock when it was almost at 140.50 in 2014-15 onwards, and from there on the stock moved up to 1200-1300 mark. So after that 10x kind of a jump, it's but natural for these stocks to go into a 20-30-40% kind of a correction from its all-time high. So I think going through that kind of a phase, I believe that it's a good opportunity where you can look to continue to hold on. In case if you're looking to add further for KEC International, I would recommend that maybe closer to 640, 650 mark is a good range where you can look to add or average further.
All right, let's move on. Avinash, this is a question from Smita, and she's from Bangalore, and she's bought 125 shares of Eternal at a buy price of 261. And with a short-term view, she wants your advice. And how long, even if in short term, what's the time duration that we are looking at?
No, I think as far as Eternal, that is Zomato, is concerned, I think, taking a short-term view will be little immature because, this business is yet not fully profitable. And I think the food delivery business is extremely competitive. You're seeing new players coming now on the market, especially names like Swiggy and Zepto. So I think, if you've got a short-term view, then I think you need to keep a stop loss, which is adequate to your. But if you're looking at a medium-term view, then I think the next 12 to 15 months, I think you can hold on. My sense is that numbers could be definitely be better in FY27. Hopefully, I think competition will cool off and I think margins will improve. And I think the company has been making a very conscious effort in improving their EBITDA margins. So I think overall, if the view is medium term for the investor, I think stay invested. This company will definitely do well because, lifestyle habits are changing. And I think there's a very big opportunity and runway for capturing this growth by a company like Eternal. So I think stay invested if you've got 12 to 15 months.
Stay put when it comes to Eternal. That's the call coming in from Avinash. But time now to slip into a very short break. Don't go anywhere. We'll be back with more on the other side. Queries. We have so many queries that are trickling in, and the next query that we have is coming in from Matthew. And Kunal, let me take it from you because Matthew has actually bought a call option of Astral. The stock has been quite very volatile, and 1560 call option he has bought at a price of 32 rupees. That's for the current expiry, and he's holding 5 lots for this one. Oh, that's quite out of the money for him. Kunal, what's your view on this one?
What's the purchase price you said?
1560 call option at a price of 32 rupees.
Oh my God. So I think the stock is almost, I mean, the call option is as good as I think 2 rupees or 3 rupees, if I'm not wrong, at a 1560 strike. Uh, I mean, difficult to, now suggest maybe an averaging out at current levels because I don't see the stock going into any kind of a major breakout over the very near term. So I think, it's been trying to just about go into a mean reversion phase. The stock has come back towards its 200-day moving average. But for the stock, for option to try and come back above your cost price, the stock has to now cross levels of 1600, which in an immediate term, without any kind of a trigger as such, looks to be a bit difficult.
All right, so that's a take on Astral. But then let's move on. Avinash, this is a question from Neha from Bangalore and Dredging Corp and Kaynes Tech. She wants to know fresh buying levels and the targets that you might want to recommend.
So I think as far as the Dredging Corporation is concerned, it's one of the largest dredging players in the country, has an order book of almost 1400 crores. And now this company has been handed over to a consortium of 4 public sector companies. So basically growth has been quite good. In fact, we believe that in the second half, you could see a very strong performance from Dredging Corporation. Liquidity is little slow in this counter. So I think if you need to buy, you need to keep a time frame of at least 12, 18 months. But I think at least 1300, 1350 looks to be a reasonable price for Dredging Corp. Also, another company which you mentioned, Kaynes Technologies, is up today. In fact, in the last few weeks, the stock was down because of some corporate non-disclosures related party issues. Our belief is that the management has given a clear, mandate that this will be corrected. These was, one-off kind of adjustments. So I think unless you got a, at least a 18 to 24 month view, because most of these EMS stocks are valued at fairly expensive valuations. Kaynes has come down quite significantly, but if you expect a risk reward in the short term, it may not happen. So over the next, say, 2 years, I think things will definitely stay corrected, and I think definitely growth will come in. So I think both the stocks look good from a long term point of view.
All right, that's the take coming in on both of these counters. Let's watch out for that. But the next query, Avinash, is coming in on Belrise Industries. Shibu Thomas is holding the shares. He didn't mention the quantity, but his purchase price is 125 rupees. Not much time that the stock is listed on the bourses. But what's your perspective on this particular stock?
See, this is a very well-known auto component player which operates largely in the two-wheeler space. In fact, they have got a very large marquee customer list. And I think my sense is that, he's invested after the public issue at around 125. He should stay invested because the second quarter numbers, Shristi, have been very fabulous. A very strong growth in both the top line as well as profitability. And the management commentary has been very strong. In fact, they expect the second half to be equally stronger. So I think, you could look at levels of 175, 180 in the near term, but I think it's definitely a good stock to hold on. I think even FY27 should be a lot better. So continue to hold.
All right, continue to hold and 170 or up levels possible in Belrise. Kunal, next question is on Groww. This is from Manoj and he wants to know the future. He's bought Groww at almost 165. He's got 200 quantity.
See, to look at a chart history for me to look at this on a longer term basis, but then over the last 1 month or so, when the price history is there available for Groww, it clearly indicates that the stock went through a very frothy kind of a rally from 110-20 levels to almost on the verge of hitting the 195 to 200 mark, and now the stock is going through a corrective phase. I see this as a stock which could probably continue to go into a mild correction further. Maybe a retest towards the 135 to 140 range is what I can expect over the very short term.
All right, so that's the take coming in on Groww. Let's watch out for that. But moving on to the next query that we have is coming in from Akhil Bakshi from Mumbai. And what's your view on Coal India, Avinash, if I may ask? Because Akhil is holding 1,000 shares of Coal India at an average price of 440 rupees. It's been almost 2 years that he's been holding this particular counter, and late no big moves rather is what we have seen. But what do you advise? What should he do?
No, I think, Coal India is largely a dividend play, Shrishti. I think if you look at growth, Coal India is not the right candidate despite having a lot of cash reserves and being profitable. I think the biggest challenge for Coal India is that, pricing power is very difficult. And most importantly, earnings growth has not been up to market expectation. And in fact, the investor seems to have purchased this share at a fairly high value. So in the very near term, it's difficult to believe whether we'll get his cost price in the very near term. My suggestion would be that look at the public sector banks, where I think the valuations are very attractive. Something like a Punjab National Bank or a Canara Bank or a Bank of Baroda. I think that would be a better shift for him. He could definitely get a better alpha by investing in the PSU banks rather than staying invested in Coal India. Because apart from the dividend yield and the dividend factor, I don't think there is any near-term trigger in Coal India. So a switch would be advisable.
All right, so that's a take on Coal India. But then time for a short break as well, and post that we'll continue answering your stock-specific questions. The number is flashing on the screen. Just send across any stock-specific question that you have. Welcome back. You're watching Buy Now, Sell Now, and we're answering your stock-specific queries. Last leg of the show, just in case you have not yet sent across your questions, this is the time. Do not miss this window. The number is flashing on the top of your screen. That's a WhatsApp number. Send across your queries. Write down the stock's name, the buy price, and the time horizon till which you want to hold it on for. But then let's move on. And next question is coming up from Swati. And Avinash, I'll come to you. It's a long-term query. She's holding Piramal Pharma at 210 for long term, but she also wants to know if she can exit almost 10% of the quantity right now at this price.
I think Piramal Pharma definitely is a good long-term player in the CDMO space. I think if the investor has some short-term emergency, then definitely one can exit. But I think over the next say 12 to 18 months, the company has a decent order book, a very strong visibility in terms of revenue, in terms of margins. And I think the company has promised that in the second half, numbers should be much better than the first half. So I think if the investor can probably wait for the next 12, 18 months, definitely one should hold on. Booking out, either a small loss is an individual decision, but I think long-term prospects here definitely look quite promising.
All right, so that's the take coming in on Piramal Pharma. Let's watch out for this particular counter. But along with that, let's move on to the next query then. And this one is coming in on Vedanta. Kunal, if I can have your view on this one, because Maithili is holding shares of Vedanta at a price of 277 rupees. Hold or sell?
Yeah, definitely a hold. I think the stock has gone through one of the worst phases over the last 2-3 years, where it had gone through a correction initially from 400 to 250, and then a recent correction where the stock corrected from 520 levels to I think 350, 375 thereabouts. So in that context, the stock has managed to make a comeback. Every time it's seen this kind of a sharp selling. Since your purchase price is at a much lower end, I'll suggest a hold on Vedanta.
All right, it's a hold on Vedanta. Let's take other question, and this is from Khurshi, Delhi. And Avinash, once again, it's a medium to long-term purchase. And this is on Indian Bank, if I'm not wrong, that she's inquiring about. Yeah, 100 shares of Indian Bank at 835. She wants to buy more, or she wants to know the levels at which she can average and buy more maybe. What will be your recommendation? Also, IndusInd Bank at the current levels if she can buy.
No, I think first of all, on IndusInd Bank, we would be a little cautious. I think we'd prefer to wait for the December quarter to come out. Unless the numbers come out, there's a clarity from the management side. I think IndusInd Bank should be avoided. As far as Indian Bank is concerned, I think even at the current levels or around 750 odd, one could definitely look at averaging, but time frame has to be 12 to 18 months.
That's the take on both of these counters. But the next query that I have is coming in on Route Mobile. Kunal, Balakrishnan from Chennai is holding 50 shares. Buy price is higher than the current market price because he's having a loss of 5% right now on Route Mobile. And look at the fall. It's almost 39% down in the past 6 months. Should he exit or buy more at current levels?
See, not to buy the stock at current levels, but purely from a short-term angle, I think the stock is trying to form a near-term bottom at the 650 mark. Twice the stock has shown some bit of recovery from the 650 odd levels. Volumes have improved for the stock price, and there was this minor rally or a recent run up in the stock price towards the 750 level. So that indicates that we could be looking at the stock being a little bit more range bound. 650 on the downside, 750 on the higher side could be a trading range. Since your cost price is 5% higher than the current market price, which means closer to 690 thereabouts, I believe we can hold on to the stock price. I said that try and take advantage of this trading range of 100 points, 650 on the downside and 750 as a trading range, where you can look to exit or book profits on the stock price.
All right, let's move on and let's take other question. This is specifically for Kunal, and this is Shri from Bangalore, and she wants to know about Dixon and M&M. 50 shares of Dixon at 14,500 and M&M 3690, 100 shares. Should I sell, hold or accumulate at this current market price? Short-term trends he wants to understand.
See, M&M is a little tricky, frankly, because the stock price has run up exceedingly high, and it seems like that most of the indicators on the weekly, monthly charts are in the slightly overbought territory for M&M. So my expectation that the stock may just about remain into a flattish kind of a zone for a very short-term period. So I would suggest maybe an exit or book profits on M&M if in case the stock sees some kind of a rally. Dixon, I think the stock has gone through a decent correction in the recent past. It's a good level where you can look to hold.
All right, that's the take coming in on both of these counters, M&M as well as Dixon Tech. Moving on to the next query, and this one is coming in from Venkatesh, writing to us from Indonesia. And Kunal wants your view specifically. Can he buy Deepak Nitrite at current market price for the next 2 years? What will be your advice?
Well, yeah, I think from a 2-year perspective, it's a good range where you can look to start nibbling into the stock price. 1530 is where the stock is trading right now. Has seen a big correction from 3,150 plus mark towards now 1,500 levels. So it's almost like a 50% correction. You can look to start nibbling at current levels. The longer term support for Deepak Nitrite is, however, around the band of 1,400 to 1,300 kind of a zone. So maybe there could be a retest towards the longer term band or a support price for the stock price, say over the next 3 to 6 months. In case if that happens, look to add further.
All right, Avinash, this is a question from Vidya from Bangalore, and 2 years time horizon L&T. She wants to know at what price can she buy, and is it a right hold in terms of the time duration of being more than 2 years?
I think clearly, Larsen and Toubro is one of those large companies which operates across multiple segments. Whether it is engineering, capital goods, or defense. I would say that if the investor wants to have a compounding kind of return of say 14-15% over the next couple of years, I think this could be a very safe bet in this market. So I think based on the kind of risk reward I told you, I think maybe 3,800 to 4,000 could be a good level to accumulate it slowly in a SIP way. Targets, I think one can keep a reasonable target of around 15% over the next say 12 to 15 months.
All right, but the same group company, that is L&T Finance, the next query is on this one. This one is coming in from Vibhu, writing to us from Bangalore itself. Kunal, your view on L&T Finance, is this a good level to enter this particular counter? He's looking to hold this for the next 2 years.
See, it's a good stock to have in terms of your portfolio, specifically from the entire HFC stroke NBFC name. But then maybe not the best price because the stock has run up exceedingly high in the recent, I think 10-12 months. If I'm not wrong, it's up 100%, 120 odd percent. The last I remember for L&T Finance on a YTD basis. So maybe price-wise, it's a little expensive. I'll suggest to buy this on decent phases of correction.
All right, decent phases of correction. That's the strategy as far as L&T Finance is concerned. But the next question is again a short-term query. And Kunal, I'll come to you. Mr. Balan is a senior citizen and he wants to sell AB Capital and L&T Finance, 20% profit right now. Is it the right time? I mean, I'm not sure whether he really needs the money, but then if it's just for profit-making purpose, is more short-term chart indicating a strength further?
See, I think, of course, there are two questions over here. One is a time frame. The other is whether you are in an urgency or need of the capital in that sense. If that's the case, if your time frame is limited, and if you are looking to probably use the capital for some other purpose, then I think then it makes sense to book profits into both of these names. But if you're specifically a long-term investor, say with a time frame of 2 years, 3 years plus, then I believe you can continue to hold on to both of these stocks.
All right, hold on to both of these counters. That's the advice coming in from Kunal when it comes to AB Cap as well as L&T Finance. But the next query that I have is coming in on Talbros Autos. Avinash, let me take it from you. Subramaniam from Chennai is holding the stock at a price of 85 rupees. Whether to hold for the medium term for a good return, what will be your advice?
No, I think you can continue to hold. Our sense is that the automotive sector has started gearing up now post the GST cuts and the interest rate cuts, and with rural demand also showing good signs. I think it's definitely a good period for them. The next 6 months, as well as FY27 Srishti should be definitely good. They cater to the four-wheeler and the two-wheeler sectors, and I think it's a very well-established OEM vendor. So I think keep the faith, and I think next 12 to 15 months should give a better risk reward.
All right, 12 to 15 months time frame is suggested. Manash, one more long-term query, and this is on Tata Elxsi from Mr. Guru, Chennai. And 7150 is the level at which he wants to hold on for almost 2 years' time. Avinash?
Yeah, I think looking at the kind of growth trajectory Tata Elxsi has got and the kind of order book it derives, I think giving a target price, Kavita, at this point of time would be a little difficult. But yes, I think it's a well-managed company with a very strong order book and good visibility. So I think, even at these levels, if one were to stay invested for the next, 12 to 18 months, I think one could definitely expect a decent risk reward once, the mood in the IT market improves. Hopefully, the sentiment will improve, and the numbers will obviously come better for the second half. So we are constructive here, but I think keep the horizon slightly longer term.
That's the take coming in on Tata Elxsi. But with this, we are completely timed out in this edition of Buy Now Sell Now. Thank you so much, Kunal, as well as Avinash, for taking the time out and helping our viewers resolve their stock-related queries. But with this, it's a goodbye from me and Kavita and the entire team who put this show together. Thank you so much for tuning in. But don't go anywhere. Markets at noon will take the action ahead.